Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. It is up 0.8% this week, so just still keeps hitting new all-time highs, and why wouldn't it? Um, bias for next week is to the upside. Close the week at 58.64. I think we'll probably see 6,000 here sometime soon. Going to be a little bit brief this week. I'm still traveling and the Wi-Fi is a little iffy, so I've removed some of the companies, but we got the bare bones ones in here and the critical ones. And the dollar is up 0.5% for the week, so we basically have some resistance now. So if I zoom out here, still trading in the box. Thought we were going to break out of the box down here, but shot right up and closed the week at like 103.50, hit the 200 moving average and then bounced down. So my bias would be that the dollar would get weaker next week, as in it's going down. I think it bouncing here off the 200 moving average is going to drive this down, which the weaker dollar should increase the price of commodities. Now, what's been interesting here is that gold, despite the dollar having been going up, gold has also been going up. So, some real macro things in here for gold that have just been pushing it higher. And so, we've got a new all time high again for gold, new weekly all time high. Closed the week at 2730. So pretty impressive, up 2% for the week. So that little white line right here I drew at 2,700. It just blew through that on Friday. Pretty impressive. Awesome. But as far as support levels down here, I do still expect gold to roll over and probably at least touch 2,550. Hopefully, we get down into 2,400 and 2,300, which I think would be some real buying opportunities. But my bias for next week actually is up on gold. So if I'm right and the dollar gets weaker, then gold should shoot up even more. We'll see how this plays out, but I do still expect some kind of general pullback here. But I don't know. We're in a bull market here, so maybe I'll just be proven wrong each and every week, and it'll just keep climbing. Gold divided by the S&P 500. Gold outperformed the S&P 500 by 1.1%, so closed the week at 0.465, so inching closer to that 50% mark. And GDX, heck of a week, up 7.7% for the week. Got some support levels down here at 38 and then another one down here at 36. Resistance for GDX is going to be just slightly higher. I would say right about, let me back this up here so you guys can see how the Wi-Fi is kind of lagging a bit. Um, where did I draw it? Right there at $46 for the next resistance point for GDX. And for GDXJ, that one is up 8.8% for the week, which is really impressive. Just gold moved up and 2%, and then these shot up. And that's why you got to be in the miners, because they are so leveraged to the metal itself. You could be really missing out on some opportunities if you're not invested on them. So up 8.8% for the week. Next resistance is going to be $56. And but usually when you get these shoots just rockets up like this, like these, wiki candles like that, usually there's some kind of pullback, but maybe we'll see 56 next week. We'll see. Franco, Nevada up 7% for the week. Joe, that one also just shot up. Last week we had the resistance line drawn at 130. It blew through that. Now we've got it drawn at 133.50. So that'll be the next line, but still like buys down here along this 200 moving average and stink bids at 115. Wheaton Precious Metals up 9.5% for the week. I drew a white line up here at what point did I draw that at? I think I drew it at $70, and that doesn't really mean anything because we're at all-time highs now. So it I just picked a round number. That was it. But no buys right now. We want to wait for some kind of retracements, maybe at least touching down here on the 50 moving average or the 100. Hopefully it comes back down here to around 52.50, which would line up with a lot of back support. And Gold Royalty Corporation up 8.7% for the week, looking fantastic. Closed the week at a buck 50. So these limit orders back here at around 120 or so, looking pretty good. Still got our limit order in down here for 120 again. Just lining up with this double bottom right back here, which would make it a triple bottom. Next level of resistance is going to be around this 200 moving average, which is like 155, 160. Origin royalties up 12.1% for the week. So pretty impressive. Closed the week at 123 and on the over the counter. Pulled our limit order from a couple weeks ago for 120 and glad I did. I think we still got some more upside in this. And as soon as the arbitration clears for Altius, I think we're going to get a real re-rating on this stock and we can take advantage of that. And Barrick Gold up 4.7% for the week. So resistance is basically now, and then support is going to be down here around 1850. We got a lot of back support right back there, but pretty stretched technicals on all these gold stocks. Newmont up 6.1% for the week, just absolutely killing it. So the times that we were talking before where we were loading up on Newmont, Barrick, Agnico Eagle, I think now we can start to like kind of trim your positions. If you haven't trimmed any from when we were buying this, this wasn't even a year ago. This was 8, 9 months ago. We're loading up on this thing, and now we've pretty much had a double. At some point you got to pay yourself, and when you got stretch technicals like this, when you got RSI at 72, and I mean just making just radical new highs, maybe take 10, 15, 20% off the table. And Agnico Eagle, our favorite one here, this one shot up 8.4% for the week. Don't see any buys on this one, but got pretty good support down here at, what is that, $73. And then resistance is going to be the all-time high up here at 88. And Equinox Gold. This one is down overall 2% for the week, but they had their basically their guidance coming out that we're waiting on, and it showed that they adjusted their guidance down, which was kind of a bummer. We were hoping that they were going to keep the guidance the same, essentially saying that they're going to be pulling more metal out of the ground and making more profit while doing so. And last week, you'll remember I said, oh, we got this in here at $5.25. I need to up that to $5.35 because that would line up right here with this 200 moving average. And I didn't do it. I forgot. And so it got down to, what did it get down to? It got down to, see, use this software, just hover over right there, and then you can see what the highs and lows were right here. And it got down to $5.29. So it would have hit, and I didn't do it. So hopefully you guys got it in for $5.35. I've since put that in there, and now it's at $5.35. But yeah, that was a bummer. So I missed that one, and then of course it shot up day late and a dollar short, or a day late and 40 cents short. Would have been nicely into the black on that one had it hit. But anyways, hindsight's 2020. I can see straight looking backwards. G Mining Ventures up 12.9% for the week. So awesome. I just drew this line right here at like $8 because this is all-time highs now. But looking fantastic for this company. I think we're going to want to be in this one for the duration of the gold bull market. I love the story behind this company, and I think it's going to do really, really, really well. And silver story of the week. So this is incredibly exciting right here. Okay, so we got a new weekly all-time high going back like 12 or 13 years. And this $26 line I think is for sure going to hold. Now I think we just got to hold above this rising 200-day moving average, which right now is at 27.75. Closed the week at 33.23, but for a hot minute it got within pennies of $34. So 33.95 intraday, just barely got there. Now the next real level that we're going to want to watch here on silver is going to be the $35 mark. So we're going to need a couple weekly closes above $35, and then I think we're going to be going up to 50 pretty quickly because there's very little resistance in between 35 and 50. I mean, you got a little bit right here around like in the low 40s. You got some price action down here around 40, but there's really not a whole lot. Whereas if you look down here around like was that like 16, $18, you just have years worth of price action. If you look around this $26, that's why I drew it in such a thick line there. You have years worth of price action around $26. You got quite a bit of resistance too. Well, now it's support at 32 for silver. So now that we're above that, the next level is 35. So be watching 35 very closely. My bias for next week for silver is actually down. Usually, when you get these wicks looking like that, you get a little bit of price correction, but just fantastic to see it close the week, above $33, and it just almost clipped 34. So it'll be interesting to see what happens in the Asian markets over the weekend. And gold to silver ratio, silver outperformed. Last week, I believe the ratio was 84 to 1. Now it is 82 to 1. And SIL, our favorite silver miners ETF, is up 8% for the week. Just looking fantastic. Really stretched technicals on this. RSI is 74. So if you guys ever want to take any profits in this, I think now is the time. SILJ up 8.9% for the week. So looking great. First big level of resistance right up here is going to be around $15. Levels of support down here like 11.25. So no buys right here. If anything, you want to trim. Pan American Silver up 9.7% for the week. So we had the resistance line right here at 24. It blew through that by 41 cents. Closed the week at 24.41. Next level of resistance is going to be up here at 28. So no buys on this, but looking fantastic. We got a rising 200-day moving average. Quite a bit of volume there on Friday. Yeah, looking great. Love this company. And you get, a couple of free mines essentially in this thing that if they ever get turned on, the one in Argentina and I'm blanking, I think it's Guatemala. If they get turned on, then this thing's going to get re-rated overnight. SILV, Silvercrest Metals. So past the point of concern on this one. So this one is essentially free. We got back our initial investment, paid ourselves a little extra, and then paid the tax man. So everything in this one is for free. This one's up 10% for the week. And this is fantastic because they're combining with core mining. And we were talking about this one in the Rule classroom. Rick just did a Q&A where one of the students asked him about the Silvercrest core merger, and Rick went into a lot of detail on that. I'd highly recommend the Rule classroom. There's loads of free content. We're up to 9,094 members strong and growing, and that is 109 more students than last week. And so a lot of free content on there. You can ask the professor yourself. And if you're a serious investor, I would consider joining the Rule Classroom Plus, where you get a much more personalized experience. And your fellow students are, we'll just call them the honor roll. They're super smart. They follow some of these companies more than I do. And I'm honored just to be a part of the group. That one is $30 a month. But when you think about how much you're betting on these companies, that's essentially free. Okay. Links are in the pinned comment below. I hope to see you there. Copper, paging Dr. Copper, is down 2.4% for the week. So this one's kind of exciting right here on the charts. Got a little bit of a retracement and then hit right on the 50 moving average right there. Bit of a golden cross right here, kind of middle of the road technicals. I wouldn't place a bet here, but I'm actually thinking that copper's going to move up next week. We got a tiny bit of a fib right here. You can see it's hitting right in there around the 61.8, right on the 50 moving average. So if you wanted to do a trade in something like COPX or COPJ or run an option or something, I think this looks kind of compelling, especially with the dollar probably going down next week for copper. And COPX down 2.2% for the week. So don't really see any entries on this other than maybe that option that I was talking about. But I'd really be watching this $42 support level right here. Might have to inch this up just a little bit because the 200 moving average is coming up. But technicals are for like a long term like bet here. I think we want to see lower RSI. Although my bias for next week is generally up for copper. I don't think this is the time to put in a long term bet. We want to see this come down just a little bit more. COPJ is exactly flat for the week. Did not go up, did not go down. Well, it did, but it closed exactly where it started, which was kind of interesting to see 0.0% as far as movement. But yeah, looking for levels you want to watch here $21 and $19.50. And Freeport is looking interesting, looking like a golden cross might be coming up right here, but still pretty high technicals. They just paid a little dividend, so that was probably part of the sell off. Um, yeah, I really like the level down here at $40. That would create a nice little, I guess that'd be a triple bottom, but level. If you want some of this company and you don't have any yet, I'd be watching around this $45, $46 level right here, right around where the 200 and the 50 are meeting. And Arizona Metals is up 7.5% for the week. So that's pretty encouraging. I reached out to Arizona Metals for an interview and then followed up with them for an interview and still haven't heard back. Although I know Peter Granich and Michael Gentili did an update on them. So definitely check out Peter's channel. And uranium is down 0.4% for the week, but still holding comfortably above that $80 level. So looking fantastic there. And SRUUF is up 2.3% for the week. So if you're a trader, I think uranium probably has a little correction to do next week, and we're kind of getting in. See, like right here on this one, it's hitting up around the 200 moving average. We hit once there where we sold a week before last, and then it's hitting again with a bearish reversal bar down, looking like we're probably going to get a little correction here in uranium. So, with that in mind, and some of these equities, I know a lot of you guys were buying Cameco when it was back down here at $35, and look, now you're up at almost 60. I mean, that is one heck of a move, and I know a lot of you have placed a decent bet on that. You're up 60%. This is kind of an interesting point here, I mean, you could sell a pretty decent amount, basically get your shares for free and rinse and repeat. Once you get technicals that are up around 83 in the RSI, that's usually not sustainable. So I just put the resistance line up here at 60 again, just because it's a round number doesn't mean anything. Once you're making all-time highs here, it's I think there's a lot of narrative here in uranium right now that hasn't, how can I describe it? It's more news based, I believe. In other words, we got the news of Amazon is investing a $500 million into small modular reactors. There's a lot of small modular reactor narratives going on out there, but it's going to be years before they're actually like, you know, creating demand on the side of that. Does that make sense? So I think we might have caught like a little news arbitrage. And if we go back over the history here of uranium, you guys know absolutely how volatile it is. Well, if you want to, if you're just a buy and hold, you know what? I think at $35, you got a great deal. And if you just want to ride this out for the next few years, I wouldn't blame you. But if you're a trader, remember this moment. Okay, you're up 60% from that $35 mark that you hit, and something to take note of. And Kazatomprom is up 6.1% for the week. Exited my position on Kazatomprom. It was just getting a little too risky for me. I've had this one for years. I mean, they paid an amazing dividend. They paid, what did they pay? It was like 7 or 8% a year. So made out decently on that. I thought about waiting to trade it to the upper end of the box, which I think will hit. But with the rotating management, I don't know. I've gotten stuck in these things before. I've gotten stuck in China, China Mobile. That one was awful. Then Polymetal, Gazprom. I mean, these things just go to shareholder heaven, and I didn't want that to happen, especially on a position that I already made money on and I've had for years. So I got out. I think I think the company will do great, but with so much turning management, it just really had me concerned. And this was less of a technical exit than it was just let me just get out. Besides, we already have quite a bit in URNM, and that's like 15% of that bet. URA up 11.5%. Okay, so here's another one, right? Take a look at this. We'll run the little ruler over here. You can see you're up almost 50%, right, from your buys down here. So, take that or leave it, whatever you want. But basically, got some resistance right back here, right around $33, $34, kind of like right where we are now. Wouldn't surprise me at all if we have a decent pullback. And URNM up 10.3% for the week. So my profit targets are going to be up around $59, $60. And then buys on this one, pretty much anywhere around this like green line right here, this upper channel green line. It's got quite a bit of support going back. Nice little trend line, so if we get back down here around $40, $41, I think that'd be a nice entry point. And URNJ is up 13.6% for the week, lining up with this right back here. RSI, everything getting super. I mean, back here, when everyone hated uranium, the RSI was 30, and now it's up all over Twitter, everything, rocket ships, and RSI is up at 75. So, if you guys want to take any profits, I think now's the time. And I love this software, TradingView. I would have absolutely no idea of when to buy and when to sell if it wasn't for this software. I know you guys are liking it too because you're using the link. So thank you. Doesn't cost you any extra, and it supports me and my work. I love getting your guys' emails and tweets with your charts. So you guys could try it out for free with the link in the pinned comment below. It's absolutely no obligation. If you don't like it, well, it's free. Uranium Royalty Corporation, this one just a little darling here, up 16% for the week. Closed our option. So we took an option on this thing, uh, when was that? Like 8 months ago. And it basically did nothing. It just was in the toilet, essentially thought it was going to expire worthless, and then sold it 2 days before it expired for, I think I only lost 25 or 30% on that, and I was expecting to lose everything. So that was cool. Recovered most of my bet, which was nice. Don't see any buys right here. I mean, look at that RSI 76 in the daily. But this was the resistance from last week. I think resistance now is going to be up around $3 and we'll call it 15 cents. And crude oil is down 9% for the week. Bias for oil for next week is actually still going to be down just slightly. Got some support down here around, I drew it at 66, but it's pretty much from like, 64 to 67, something like that. I'm sorry, I drew it at 67, but yeah, 64 to 67 is going to be quite a bit of support, but it does look like crude is going to come down a little bit more next week. And the equities, our favorite oil ETF, XLE, down 2.6% for the week, hitting right on the 200-day moving average. If oil continues to fall, which I think it will, that's not going to mean anything. XOM, our favorite oil company, ExxonMobil, we've got down 2.9% for the week. So hitting on this first level of support. So if you don't have any ExxonMobil, maybe place 10% of, well, let's say you're going to bet $100 on ExxonMobil. Well, it doesn't make any sense because the share price is 120. Okay, let's say you're going to bet 1,000 on ExxonMobil. Maybe place 10% of that bet right now. All right. So you buy one share, and then you buy two shares down here at like 114, and then you buy three down here at like 109, and then you buy four shares down here at like $100, right? But like this one a lot. Don't see any technical entries right now other than that first support level if you don't have any. But yeah, we want to see this sell off a little bit more, and I think it will as oil gets weaker. And Echo Petrol, by popular demand, Okay, so basically, where is an entry point that we could possibly find on this thing? And sometimes I get accused of trying to catch falling knives, and this might be it. But I think you guys are using this software and seeing what I'm seeing because you're getting excited because it's absolutely going into the toilet here. We've got the RSI on the weekly at 24. And first level of support that I see, I mean, actually last week I would have said that there was support around where it was around like $9, but it fell through that and closed the week at 8.23. So next level of support that I see is going to be $7.70, and that's just lining up with some back support back there. I don't really see any discernible patterns, so all I'm doing is just finding price action from like the COVID crash and before that, and lining it up back there. So like 770, 650, somewhere in that range, just limit orders. But this thing pays pretty amazing dividends. They're not diluting. Um, I don't know, kind of compelling. I don't really follow this one, but if it were me, that's where I would be making entries. And natural gas is down 14% for the week. So far, we've just been spot on with calling natural gas. And right here, this is kind of interesting. So it's hitting right on the 200-day moving average. RSI is getting pretty sold off, down at 35 on the daily. If this bar looked a little different, like the closing action were up a little bit higher, my bias would be the upside. I don't think this 200 moving average is going to hold. I think it's probably going to shoot down below it on Monday and Tuesday. Next real level of support is going to be around $2.13, and then after that, $2. Devon Energy down, what was that? Can't read my own writing. 5.4% for the week. So this is pretty cool. Hit right on our first level of support here at $40.60. And actually, you guys can probably already see it, and I don't even need to draw this, but hitting a little bit of a Fibonacci there, right? So if you don't have any Devon, I think now's a great price point to get it at. And then you can have another limit order down here for around $38. Paydo down 4.1% for the week. So getting close to our limit orders right here. Got a limit order at $10.65. I think that'll probably hit, hopefully. Got a lot of support right down here around that level, around 1060 to 1080. Got a lot of moving averages in there to catch it. And then David, thank you for the donation. You are a gentleman and a scholar. Um, David says, could I get some quick technicals for the company Honeywell? Okay, so Honeywell, I think this was on your radar because they have a UF6 uranium hexafluoride processing facility. So basically, they're able to process uranium in the advanced fuel cycle and get it down into UF6. The problem is, I've asked Justin about this. Excuse me. I've asked Justin about this, and he said that the volume that they process is so little that it really doesn't. It's such a small percentage of their income that it doesn't really give you much of a play as far as the uranium sector. And he said, and it's probably not going to get bigger. But we're having Justin Hune back on the show, so make sure that you submit your questions for him and maybe ask him about this company if you want and what their capacity is and all that. But as far as a technical entry here, David, I actually see a compelling argument to sell right now. Okay, so maybe we've had a little bit of a run up because of the news in uranium lately with all the AI and the data centers and everything, and a lot of that demand's not going to come into play until later, like we talked about. They do pay a dividend; it's about 2%. But see, look at how stretched the technicals are right here. So 77 on the daily RSI, pretty high up, and on top of that, we're kind of lining back up here with a lot of previous price action. So that would lead me to believe that, maybe not immediately, but we're probably going to get a turnaround. I would rather be buying C back down here when the RSI is 31 and MACD is down in the toilet. I like those entry points. So it's just kind of a easy set it and forget it one. I might do like a layered, what do you call them? Layered limit orders or kind of like staggered bets in. And just for ease of memorization, 200, 190, and 180 might be points that I'd be looking at. I just rounded here to to make it easy to remember, but maybe even a stink bid down here around 168, 170. If we get a pullback in this, I think those are kind of interesting points that might be neat to layer in. All right, thank you, David. Hope that helps. If you want to see me review your company like I did for David here, there's a link in the notes below for a donation. And thank you to all who have donated. Coal. Thermal coal is closed the week at 145, so trading at the upper ranges there. Met coal closed the week at 203, so kind of middle of the road. If 185 is the floor and 230 is the ceiling, we're kind of middle of the range there. And the coal ETF is down 3.5% for the week. So this one's looking pretty interesting. Got a fair amount of price action where we are now. So if you want to position in coal and you want to do the beta way to play it, I think probably first entry point around $22 and then 21 and then 20. And then I've got a stink bid in down for 18, although that's probably not going to hit. AMR, Alpha Metallurgical Resources, down 6.7% for the week. So kind of getting into an interesting point here. Hopefully we'll get a little bit more sell off here, get down to 185. I got a limit order, got to put the arrow, but I've got a limit order in for 185. I had it in for 180 and that didn't hit, so that was kind of a bummer. But there is a compelling entry or a compelling argument for an entry right now. If we run a retracement on this, you can see that it's hitting kind of right in the fib right there, right on the 61.8. But I'd like to see like kind of a little double bottom right there. If we can get like a double bottom here in the fib, then I think that might be a neat entry point. Although the RSI is still around 40, so we'd like to see that sell off just a little bit more. Maybe we'll get some sideways action. Ideally, we'd like to see this get down to 185, and then I think that would be an easy buy. Glencore is down 4% for the week. My bias for coal for this next week is just generally down, so I think hopefully some of our limit orders will hit here. I don't know that Glencore will, but I've already got quite a bit of Glencore. But if it got back down to $9.40, I wouldn't be able to help myself, and hopefully the limit orders would hit, and that's where we got it. Yeah, but are coming up. You guys can already see it. I don't need to draw it, but are coming up just about into a Fibonacci retracement right around here, and kind of filling that gap. So if you don't have any Glencore and you want some, maybe around $10.20, 30 cents, something like that. And BTU Peabody. So we faded the put for a couple of weeks, and then it looks like I should have taken it on Tuesday, Monday or Tuesday. But yeah, I don't. Looking back on this, I've been traveling and with family, and so haven't been in front of the charts. If I were to catch this, I probably would have caught it on Thursday right there. See how this could have been coming in for a double bottom, and then it just broke that double bottom right there. That probably would have been the time to place the put. But yeah, I think this will probably come down. Initial support's going to be right around, what is that, 23.83. And platinum is up 3% for the week. Pretty exciting. Getting close to our resistance up here at 1,050. And PPLT also up 3% for the week, hitting right on resistance right there at 93. So my bias actually for platinum and palladium is going to be up for next week. Although we're getting really close to these levels, we can see it's just breaking out here on the RSI. And those bars to close the weekend look pretty good. There is some fundamental news behind this too, if it's true. Russia's good at, some things, and one of them is keeping secrets. But it looks like they're done selling platinum and palladium, and they're starting to buy it again. So that would be amazing for this bet. Palladium is up 1.4% for the week, just tapping on this resistance of 1100. So I think we'll probably blow through that next week. Looking great. And PALL, the way to bet on it in the stock market, also tapping on this resistance right here at 100. I think we'll blow through that as well. I'll blow through that, maybe, get to 101, 102, something like that. And SPPP, the easiest way to bet on both of them. So last week we had this resistance at $10.25, and we're going to have to move that up, boys and girls. We're going to move it up here. Where is that line up? Yeah, right about there. $10.60. We'll call it $10.65. So hopefully we hit that next week. Rising volume here. We've got the 50 moving average crossing above the 200. So we got a golden cross, and we still got room to run here in the RSI. Pretty exciting. Nickel futures down 5% for the week. So we were just about tapping on 18,000, and then we came back down. Now we're into the 16,000s. Bias for next week for nickel is down. NIKL, our favorite nickel ETF, just hitting right along this 200 moving average. But if nickel is coming down, which I think it is, this one will come down even more. And iron ore down 1% for the week. These charts are kind of hard to read on the daily here, but bias for iron ore next week is going to be down. And BHP is down 3% for the week. So we had that massive run up on the China stimulus news, hit around our resistance point is 62 and then came right back down. First support right here. I've drawn this $55 level for literally like 3 years, and it seems to be pretty accurate. And then we get moments of time down here where it hits 52. Like this one for a long-term hold. They pay a great biannual dividend. And if we're right about the commodities bull market, this company will do very, very, very well. Rio Tinto down 2.8% for the week, almost a carbon copy of BHP. Hit through the 200 moving average, which is not fantastic, but then bounced right off the 50 moving average right there. So if iron ore is going to go down and copper, then actually copper's going up, so this might be a little bit more leverage to that. Yeah, that's kind of tough to say now that I'm verbalizing it. But on this chart for this specific company, I would say we're probably going to hit a little bit down further beginning of next week. And pick our favorite ETF for these mining metals and producers. Thank you, Joe. Hitting right on the 200 moving average right here. So I don't see any entries. I really like these entries back down here that we're talking about around $36, $37. Look at that perfect double bottom. Just bam, off to the races. Almost looks like a bull flag is kind of coming up. I don't know. That's a little bit of a dirty one. But anyways, hitting right on the 200 moving average right here. I think the best thing for this one would be if it would come back here, maybe touch this $40 level, fill this gap, and then maybe move sideways for a little while. That would line up pretty well with a retracement in there. See that? That would hit the 50% retracement. Yeah, we'll see how it irons out. And Bitcoin is up as of this moment, recording on Friday, up 8.6% for the week. It's at 68,400. And in 5 minutes, it'll probably be 1,000 up or below that. So as far as this is going, this downward channel trend line that I've had drawn for a while looks like it might be breaking out to the upside. My bias for the longer term is down for Bitcoin. But this whole theory that I had about lower highs does not seem to be playing out. It seems to be breaking above that. So it'll be interesting to see if it can get above this 70,000 level. And it's only, what is that, $1,500 away from that. So pretty interesting. All righty. Well, I hope you guys got something out of that. Thank you for always being here. And be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy. They can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.